Corrections, clarifications. An earlier version of this story misidentified the $3.7 billion in earnings before interest, taxes, depreciation and amortization. U.S. supermarket giant Albertsons is expanding its drugstore business through a deal to buy a portion of Rite Aid, the nation's third-largest drugstore chain. Shares of Camp Hill, PA.based Rite Aid were up 14.2% at $2.22 in morning trading. Rite Aid Rad and Albertsons, the private equity-backed company that operates Safeway, Super Saver, and several other supermarket chains, said the deal would create a combined company with expected 2018 revenues of roughly $83 billion and potential annual earnings before interest, taxes, depreciation and amortization of $3.7 billion. The new corporate entity would have a value of roughly $24 billion, including debt, The Wall Street Journal reported. In all, the combined company is expected to serve more than 40 million U.S. customers per week at approximately 4,900 locations, 4,350 pharmacy counters, and 320 health clinics across 38 states and Washington, D.C. Most Albertsons Company pharmacies will be rebranded with the Rite Aid name. Additionally, the combined entity will continue to operate at Rite Aid standalone pharmacies, the company said. The deal terms would give Rite Aid shareholders the right to elect to receive either one share of Albertsons stock plus approximately $1.83 in cash or 1.079 shares of Albertsons stock in exchange for every 10 shares of the drugstore company stock they currently own. Albertsons shareholders would own 7.4% to 72% of the combined company when the transaction closes, while Rite Aid shareholders would own 28% to 29.6%. Current Rite Aid chairman and CEO John Standley will become the chief executive of the combined company, and Bob Miller, the chairman and CEO of Albertsons, will serve as chairman of the combined corporation's board. Directors of both companies have approved the deal, which is expected to close early in the second half of 2018, subject to approval by Rite Aid shareholders and regulatory approvals. Rite Aid is in the process of selling 1,932 of its approximately 4,600 stores to rival Walgreens Boots Alliance. In all, 1,114 stores had been transferred as of Feb. 8, Rite Aid said in a recent investor announcement. Walgreens and Rite Aid had planned a complete merger, but the federal government blocked that plan on antitrust grounds. The deal with Albertsons gives Rite Aid an expansion route as the company vies to compete with Amazon, which is eyeing a potential entry into healthcare, as well as retailing giant Walmart. For Albertsons, the deal enables the company to go public after being controlled since 2005 by private equity giant Cerberus Capital Management. Albertsons previously weighed an initial public offering but shelved the plan last year after Amazon acquired supermarket company Whole Foods, several media organizations reported. The combined platform positions Rite Aid to capitalize on our pharmacy expertise and expand and enhance our pharmacy footprint, Standley said in a statement issued with the announcement. Miller said the combined company would enable us to even better serve the valuable pharmacy customer by providing a fully integrated one-stop shop for our customers' food, health, and wellness needs. Moody's Vice President Mickey Charter said the deal would give the combined company the large-scale and diversified revenue base needed to compete in the highly competitive U.S. food and drug retail environment. However, drug retailing has had its own challenges with reimbursement pressure and weak front-end sales as evidenced in Rite Aid's weak profits over the last couple of years, and competing with much larger and more diversified drug retailers like CVS and Walgreens will be a formidable challenge, added Charter. Follow USA Today reporter Kevin McCoy on Twitter at KameCoinEcred to share this story. https://usat.ly/2all6sdl